I first recorded this video in a different language, and my assistant Alex insisted that I record it in English. So to satisfy him, and I actually like this topic as well, I'm going to talk about the meeting between President Donald Trump and the Federal Reserve Bank Chairman Jay Powell that took place at the end of May of this year. So the gist of it, Trump is of course insisting that the rates go down, and Powell is saying, look, you know what, we're only going to make that decision based on the economic factors. If we have to do it, we'll do it. You know, no political force can make us do it. I want to remind everyone that Federal Reserve Bank of the United States has a dual mandate. They were created in the 30s for two main reasons. Number one is to provide maximum possible employment in America. So right now, as you know, the unemployment rate is around 4.2%. So it's, you know, somewhat good. You know, obviously the economists would like to see it maybe below 4, but it cannot be 0, or should not be 0. It can never be 0. But if it was 0, for example, then everybody is working. That can also hit the inflation. So the second mandate that they have, the Federal Reserve, is of course the inflation, or keep the prices stable so they don't go out of control. And their target for that, as everybody knows, is 2%. Now, the maximum employment and price stability, believe it or not, they are related to each other. And Federal Reserve has, you know, those buttons that they can control those two. For example, if they see that the inflation is getting out of control, they can raise the interest rates, they can lower them to support the economy, etc. So Trump wants the rates go down despite of other economic, maybe indicators and needs. And Powell says, no, we're going to do what we need to do. What do you think about this? What is the right thing to do? Real lower rates, as you know, will help the consumer on the other hand.